In StratSim, you're running a company that needs money to operate and also to build for the future. And the best way to generate cash is through the operations of the company, to state the obvious. But you can also raise cash through debt or by issuing stock. And in StratSim, I can work to manage my financial condition through the Decisions Financing screen. Let's start with cash management. You can see about $3 billion on hand in cash. And before we get into any decisions yet, let's understand what that cash is and what it means. Because on the pro forma balance sheet, it says we have $10,508 million in cash. So what gives? Well, the current cash on hand at the start of this year is in fact the $3 billion as shown on the financing screen. And if you look at the pro forma cash flow statement, and I scroll down, it shows that the net increase in cash projected for the end of this year is $7,395 million. The pro formas, again, are projected for the end of the year. Add the $3,112 million that I currently have on hand with this additional $7,395. That's how I get to the $10.5 billion on the pro forma projected balance sheet. Okay, now that we can follow the numbers, the one cash management decision that you can make if you have excess cash that you don't think you're going to need for the coming year is to invest in a one-year CD or certificate of deposit. And it tells you the rate that the CD will pay you over the year. So let's go ahead and put $1 billion into a CD and click Save. StratSim considers that CD to be a cash equivalent asset on this screen, so the cash number doesn't actually go down. But it does show the $1 billion as a separate line item under assets on the balance sheet and as an investment purchase value on the cash flow statement. Now let's look at stock. You can issue, say, $1 billion in new stock and click Save, and you will see it reflected on the pro forma statements as well. For instance, here on the pro forma cash flow statement, you can see it as a sale of stock. And on the pro forma balance sheet, it raises your cash level and also your stock, and that's parsed out as $10 million that increases stock at $1 per share par value to $510 from the original $500, and as $990 in additional paid-in capital of that $1 billion to balance everything out. And you can also repurchase stock instead if you have extra cash and want to do that. Just enter the value as a negative, click Save, and it will show up on the pro forma balance sheet as treasury stock, and also parsed out as a reduction in stock at $1 par value. And it will show up as a negative on the cash flow statement as a sale of stock. You can also pay a dividend if you'd like by putting a number into this field. Let's pay a $500 million dividend. This will take the money from cash on the pro forma balance sheet, and it will be balanced by a reduction in retained earnings. And the pro forma cash flow statement now shows the $500 as dividends paid this year. And finally, there are debt decisions that you can make in StratSim. So let's go to short-term debt first. If you have a shortfall in cash at the end of a year, the simulation during processing will automatically borrow short-term debt for you at whatever amount you need to pay for what you're doing, and to also leave a small cushion of cash available to you. And that short-term debt is quote-unquote paid off every year. But be aware that if you have another cash shortfall in a subsequent year, it will borrow again short-term debt for you automatically. And this can really add up because you're paying interest on your debt. It can get very expensive. And it shows you here what the interest is that you're paying. And as before, whatever we do regarding debt will be reflected on the pro forma statements. But if you want to refinance that short-term debt by issuing long-term debt, or even if you just want to issue some long-term debt to raise money for another reason, you can do that on the financing screen. So let's go ahead and issue long-term debt, and you'll see the lower rate here at 5% instead of that 7% for short-term debt. You can also see that you have currently a bond rating of AA, with the highest being AAA for corporate bonds. And now that I've raised the $1 billion to make a total of $3 billion, we also need to actually pay off $1 billion of short-term debt if that's what we intended to do with the money that we raised. And we've now refinanced $1 billion of short-term debt with the $1 billion of long-term debt, and that's reflected on the pro formas both on the balance sheet, reducing our short-term debt, and the pro forma cash flow statement shows our financing activities as an increase in bonds issued and a decrease in short-term debt. And the long-term debt, or the bonds that you issue, have a 10-year repayment period. But there's a detail here to note, and that is that these are callable bonds, callable after 3 years. If we want to, we can now pay off that old $2 billion in bonds by checking this box. But be aware that when you call a bond, you will still pay interest on that bond for the current year. And a reminder again that you can always refer to the StratSim student manual and to the PRISM case study guide for more information. Okay, we hope that helps.